Over to John and Caroline.
Thank you, Brendan. Welcome everybody to this discussion we're going to have this tonight, led by John Mills. This is an event organised by the Institute for Prosperity. My name is Caroline Flint, and I'm chair of the Political Advisory Board, that is a cross-party board working with John and the Institute to really, amplify the volume around the need for more manufacturing that's based here in the UK. So I'm delighted to be part of this and working with John, and I'm really glad John's going to share some of his thoughts tonight with all of you. Just to make this manageable, a few housekeeping rules, if I may. If we can all make sure we're on mute during John's contribution to us tonight, that'd be really, really helpful. And after John has finished, I will be using the chat room to take your questions and put them to John. So we're going to try and get through as many as possible. So please use the chat room, and I will work my way through that in the hour that we've got with us. But without further ado, thank you all for taking part this evening, and I'm going to hand over to John Mills. Thank you, John.
Okay, thank you very much, Caroline. Let me give you a kind of 20-minute presentation along the lines which we think people ought to adopt, and see if we can persuade you that there is hope that what we can do is to get the growth rate in the economy up from where it is at the moment, which we're bouncing back from the coronavirus to some extent at the moment, at least. So we're going to see a bit of growth over the next year or so. But the real question is, what is the sort of long-term rate of growth which we're going to resort back to once the recovery is over? And all the evidence at the moment is it's only going to be something like 1%. And bear in mind, we've got an increasing population, and you've got people with sharp elbows at the top who have more than their fair share of whatever extra there is. This means that we finish up with most people getting no increase in living standards at all. And this has been the problem we've had for a long time. And I think there's a real chance, if we don't do something about all this, that we're going to finish up in 2030 with no higher living standards for most people than they had in 2019 or even 2007, with the whole generation having lost out. Now, why are we in this state? I think the main reason is that the proportion of our GDP that we spend on investment is way below the world average. It's about 17%. The world average is about 25%. And the amount in the Far East is more like about 40%. And it's this deficiency in investment which is the primary cause of the fact that we've got the low rate of growth. But there's more to it than that, because it isn't the case that all investment produces the same sort of returns. And the social rate of return, which is the return not just to the private investor who put up the money to make the investment possible, but the benefit to the whole economy from better products, lower priced products, more productivity to labour, increased labour rates, better tax base, more profitability. They are much higher. And the problem we've got is that a lot of the investment that we do make, particularly in the public sector, in schools and hospitals and housing, it actually doesn't produce much in the way of a return, probably somewhere of the order of 5% per annum. So however important it may be socially, it doesn't do much for the growth rate. Now, what does do a lot to the growth rate is only a comparatively narrow range of investment, which is around mechanization and technology and the use of power. And these type of investment can produce much, much higher rates of return as long as the demand is there. And if you look at the international comparisons and see what's happened in places like Japan after the war and China more recently, what this shows very clearly is that the social rate of return, as it's called, that's the total rate of return, is anything up to 50% per annum or more, really much, much higher than the more low-powered investment that I was referring to earlier on. And the real problem we've got in the UK is that investment in these high-powered areas is so low that depreciation of existing assets more or less equals new investment. And meantime, the supply side, at best, that is better education and training, learning from doing and so on, produces growth rates of maybe, if you're really lucky, 1% per annum. And it's because we haven't got this high-powered investment in place that the growth rate is so low and likely to stay there unless something's done about it. Now, what can we do to overcome this problem? The answer is that we need to get the high-powered investment up. But the trouble we've got is that this investment tends to be found in the highly competitive, internationally traded light industrial sector. And domestic costs make up about 70% of manufacturing total charges. And if these are too high, we finish up with our exports being priced out and the growth rate stalling. And so what you need to do is you need to be in a situation where you can avoid the proportion of the trade that we've got, our share of world trade going down, which has been recently, or for a long time. What we need to do is to get that up. And the only way you're ever going to do that is by ensuring that you've got really competitive pricing on your exports and avoid imports pouring in because price competitive on that side as well. So what can we do to make our exports more competitive? We're then back to what we'd have to do with the exchange rate. And the problem we've got at the moment is the exchange rate is far too high to make it profitable to do most manufacturing in the UK. Services are in a better position because they're not so price sensitive, and because we've got natural advantages with our language and our geography and so forth. And so they can live with the exchange rate of maybe $1.50 to the pound, but manufacturing really can't. If manufacturing is going to get back to being a significant proportion of GDP in the UK, we need an exchange rate nearer $1 equals £1. And that's a big political problem. But the reality is, unless we can do something along these lines, we're going to be stuck with increasing growth of only running at about 1% per annum. Now, what could we do, though, to overcome this if we get it right? If we could get the growth rate up by if we could get the proportion of GDP that we invest every year up to by additional roughly 4% per annum, and we could achieve out of that a social rate of return of 50%, 4% times 50% equals 2%. So the target I think we ought to set ourselves is to try and see whether we can increase the growth rate by a couple of percent per annum. And that would make a huge difference. It would mean by 2020, the economy was something like 20% larger than it will be if we continue the way we are. So it's a hugely important target there. And a lot of this then goes back to what happens to manufacturing and the proportion of GDP that we get from this source. Now, at the moment, this has dropped to around about 10% as a result of deindustrialization that's taken place over the last 40 years or so. And we need to get this back to at least 15%. And there are 4 key reasons why manufacturing is so crucial to getting this done. The first is that productivity increases are much easier to achieve in manufacturing, because that's where you've got this really high-powered investment taking place. So the bigger the proportion of GDP coming from manufacturing, the higher the productivity increase is likely to be, more output per hour, and a higher growth rate. The second is that manufacturing is going to be the solution to the problem of dealing with the areas of the country which used to be where our industrial strengths lay, which are now diluted of manufacturing jobs. So to rebalance our economy, what we badly need to do is to get more manufacturing out in the regions. The third is that job quality tends to be higher in manufacturing. Manufacturing wages are higher than those in the rest of the economy. Around about 10% of GDP comes from 8% of the labour force, showing you've got something like a 25% premium. And finally, if we're going to be able to expand the economy, we need to have a balance of payments that isn't going to be a constant constraint. And the only way we're ever going to do that is to be able to sell more abroad. So really, where are we going to finish up on all this? Will the change that we need to make happen? Will we go to or rebalance our economy by going from an exchange rate which will shift the economy around the way I've just suggested should be done, to get a much higher proportion of our GDP coming from high-powered investment? And the answer is that it's going to be very difficult, because people love their high pound, they like their cheap holidays abroad. The city likes a high pound because it gives them more international leverage. And there isn't a hugely at the moment, strong category of people pressing for having a lower exchange rate. But the problem is, if we don't do this, then the chances are that what's going to happen is that we're going to have very little growth as far ahead as we can see. We're going to have the East, China, the countries along the Pacific Rim romping ahead, leaving us behind. And that's going to be disastrous economically, socially, politically, and internationally. So we've got some very difficult choices to make. Crucially important that we get the right ones made. That's a brief summary for you, and I'm really happy to take any questions, or respond to any comments you'd like to make.
Thanks very much, John. And you know, our advisory board, we're all very motivated by supporting manufacturing, but there are different views, obviously, on the board about how we do that. But we do believe that we should have a discussion about issues around the exchange rate, and they need to be aired. Just before I bring in everybody else, you know, you mentioned obviously about, you know, cheap holidays, people like the high pound. Why have politicians sort of stepped away from this so much, do you think, over the last 20 odd years? Why is there a sort of reluctance to have this discussion?
I think a lot has to do with the change that happened. I mean, after the war, for a couple of decades after the war, the policies that we pursued weren't that different from what I'm now suggesting should be done. But when inflation hit the Western world in the 1970s and 1980s, the reaction was to put the interest rates up enormously, to restrict the money supply. And the result of all this was the exchange rate soared up. It went up by over 70%. Between the mid-1970s and the early 1980s, and it's pretty well stayed there ever since. Meanwhile, the Far Eastern countries, particularly China came into the world trading system in about 1980 and devalued the renminbi, the yuan, their currency, by a massive amount. And this left the Far East hugely much more competitive than the West. And the result has been the deindustrialization of the West ever since. And so really the reason why there is very little enthusiasm for anything or making the economy more competitive with any sort of exchange rate approach, or even having any sort of policy at all on the exchange rate, is that the impetus behind neoliberalism and monetarism, which is really where we are in terms of economic thinking these days, is concentrate very hard on getting inflation down rather than the growth rate up. And that's really the big logjam that needs to be moved.
Thank you, John. Right, it's over to you. Questions, comments. I'll be looking in the chat room for anybody who wants to start the conversation with John. Who would like to ask a question? I'm looking in the chat room. There's nothing there yet. Anybody typing?
Anybody else have any comments to make?
Anybody want to come in?
Or would you like to ask one or two more questions, Caroline?
Yes, absolutely. So if there was a move to government to try and influence the exchange rate, how do you think they should manage that? What do you think the first steps they should take? Because, you know, obviously, given what you said before about, you know, the reluctance in this area, how would you manage it without it being such a shock to the system?
Well, I mean, first of all, there are historical precedents for all this sort of thing being done, which suggests that it's much more possible than everybody thought. I mean, the biggest single case was in the early 1930s. I mean, what happened then between the wars was for the 1920s, the economy did really very badly because there was a move then to get the exchange rate back to what it had been at the beginning of the World War I. Meanwhile, there had been much more inflation in Britain than there had been in America. And as a result, there was big balance of payments problems and all the usual deindustrialization issues that we're facing now. But what happened was the dam broke in the early 1930s, and we devalued by about 24% against a basket of currencies, 31% against the dollar. And this had an absolutely dramatic effect on the economy, which grew 3 times as fast in the 1930s as it did in the 1920s, and reindustrialized the economy to a really significant extent. Then again, in 1992, when we came out of the exchange rate mechanism, we were in that the exchange rate again was far too high. When it came down, there was everybody, particularly Sir John Major, made a big speech saying there was going to be a big rise of inflation and the economy would tank. Actually, what happened was the inflation went down and the economy grew every year for the next 15 years. So there's plenty of practical experience showing that the results of getting the exchange rate down are positive. And that there are mechanisms for getting it done by having a wealth fund, by getting the banks of England to sell currency rather than buy currency, by doing some sort of restrictions on capital imports. It's all feasible, but what you need is a government and a feeling among opinion makers generally, including the academic world, that it's all possible, it can be achieved. And that's what we're really lacking at the moment.
Okay, thank you, John. So we've got a question about would devaluation not be a difficult political sell to the public, telling them that imported goods will all be 20% more expensive? How do you get around that? TV, cars, electronics, and so on.
Well, first of all, a really interesting question is, does the inflation rate go up if you have a devaluation? Now, I was taught when I was at university that automatically it happened. And I must say, I was very surprised when I looked at the figures. They're all available, looked at lots of devaluations that have taken place in lots of different countries over the last 20 or 30 or 50 years since World War II. And what you find is that actually devaluation has very little effect on inflation most of the time at all. Sometimes actually inflation went down, as it did in 1992, or the years just after that. Sometimes it goes up a bit, but generally speaking, it stays about the same. And the reason is that although it's absolutely right that if you have a devaluation, import prices will go up, lots of other things go down. You tend to have lower interest rates, lower tax rates, you have longer production runs, you get people switching to domestic suppliers, so you don't have the full impact of import prices from rising import costs. And the net result, surprisingly, is that inflation across the board pretty well stays where it was or would otherwise have been. So I think the fear of all this is really misplaced. Having said that, there's no doubt at all about the fact that people don't like the idea of devaluation. The Labour Party in particular has had 2 or 3 devaluations by the people in their watch and are concerned about it. People like their holidays, their cheap holidays abroad. They like cheap price goods in the stores. But the trouble is it's all ruinously expensive in terms of knocking the growth rate and leaving us in a situation where there's no increase in living standards. So there's a very, very awkward choice to make. I don't want to minimize how difficult it is. It's very substantial. But the argument for getting the pound down to make the economy grow more quickly is a very, very strong one.
Okay. So I have a question here from John Doe. I hope I've pronounced that correctly. Again, it's on the exchange rate issue about making imports more expensive. Yeah. And the question is about, wouldn't that hurt the sectors that are deeply involved into the global value chains as their costs would soar? And what's the evidence on the balance on both sides?
Well, the balance on both sides is if you have a devaluation, let's say 25%, what happens in world price terms is that your imports or the components or the cost elements that you've got to deal with as a manufacturer internationally stay the same price as they were before, and that's mainly machinery and components that raw materials. They don't go up in world terms. What does happen is your domestic costs, which are not just labor costs, but it's all your overhead costs, in taxation, interest charges, all these charges, which represent about 70% of total costs, all drop, at least in the first instance, by around 25%. So if you take 70% of 25%, you get about a 20% increase in competitiveness. And if I can just say a little bit about my own background, and I've got a load of background in economics, but I've also actually made a living over the last 40 or 50 years buying and selling and making products all over the world. And I can tell you that the prices that these products are offered on international markets make an absolutely critical difference to where goods are made. And I spent 25 years running a manufacturing business in this country. which in the end went out of business in the 1970s and 1980s, when we just got to a stage where we could barely sell finished goods for the better price and we were buying in the raw materials. And ever since then, I've been involved in building up a company where most of the manufacturing is done in China, where the costs are just a small fraction. We're never going to get the economy to grow reasonably quickly. We're never going to get living standards up. So it's a difficult choice to and you know, people feel there's an element of risk about it. The risk element is all that high. But the fact is that unless we do grasp this nettle, we're never going to get the economy to grow. That's the problem.
One of the questions we've got is about the supply side, because, I mean, the exchange rate that the questioner says can't be a silver bullet. What about on the supply side? And someone else also raises a question about, Aaron Hill raises a question, have we got the skill base, even if we did all this, to revive manufacturing anyway, compared with other economies?
Well, there's a couple of questions there. First of all, on the skill base, there is a big problem in this country. We are short of skilled people, but not all manufacturing jobs involve high levels of skill. What we would need to do is to get a lot of training, but this opens up into a wider issue, which is that devaluation on its own is not a silver bullet. That deals with the demand side, but what it doesn't do is to deal with the supply side. The supply side involves a whole mass of different elements, all of which need to be taken into account at the same time as do something on the demand side. And education and training is high on the list. You need more finance to go to industry. You need a planning system which makes sure that factories can get permission to be built. You need to make sure we don't incapacitate energy exports by having energy prices that are too high to make manufacturing uncompetitive. You know, there's a whole range of different issues that need to be done at the same time. But the key element of all this is you need to get action taken on both sides, both on the demand side and on the supply side at the same time, if you're going to make this successful. But is it possible? Yes, if you look around the world, I mean, you've had all sorts of economies that have gone from going nowhere to expanding very rapidly. And if you look at what the pattern is, what have they all done? They've all started with relatively low-tech industry, which again, I think we can afford to do. We don't want to rely just on high tech all the time. You want to spread right across the piece. And quite a lot of low-tech or medium tech industry, or even high-tech actually, involves assembly work and packing and machine minding and this sort of thing, which isn't terribly highly skilled, but you do need a core of engineers and technicians who can make sure that the technical side all works. And so you actually getting education and training in that area is really critically important.
Vicky Seddon asks, we live in such extraordinary times. Do traditional economic models still work?
Well, I think the answer is that the world is changing, but I don't think that is what is going to change. It's that people are offered something at £1 and exactly the same product at 80 pence. People are going to go around buying the product at £1. It's just not what happens. You know, people will look for the best value for money, and quite right too. And what you've got to do is to make sure that you're offering reasonable value for money. I mean, the idea that, I mean, basically, if you say it doesn't really matter what the exchange rate is, what you're really saying is it doesn't matter what you charge export markets, you'll still sell your goods. And I can tell you from bitter experience that that is not the case. Unless you've got prices that are competitive in world terms, you'll just finish up by being run out of business. And that's exactly what's happened. That's why our share of world trade has gone down and down and down. It's why the proportion of GDP coming from manufacturing, even as late as 1970, about 32% of GDP in the UK came from manufacturing. Now it's gone down to less than 10%. And, you know, this is because the prices we've been charging our export customers have been too high. And until that changes, you're never going to get manufacturing back underway in any really serious way in the UK. That's the problem.
Okay. So Professor Grugilis, I hope I pronounced that correctly, Professor. Thank you. You got your thumbs up. Thank you for that. So why focus on only one action? Shifting exchange rates is a rather crude action which is extremely difficult to target. The ownership structures and activities of UK manufacturing are very different now to those of the 1920s, so exchange rate movement are likely to impact them very differently. Consider, for example, the regular border movements of car parts during car manufacturing. So what actions would you take other than moving on the exchange rate to strengthen manufacturing in the UK? Why the focus on this, John?
Well, I mean, what I said earlier on is that you need two things. You need the pull of better pricing through the exchange rate, but you need to sort of push the other outside by doing lots of things on the supply side to make sure that that's looked after. I mean, the question that really what the professor there is asking is essentially, is the economy likely to be responsive enough with a lower exchange rate to start growing more rapidly than it otherwise would? And this is back to issues around elasticities of imports and exports, and back to what sort of returns you can reasonably expect to get from higher levels of the sort of investment which has got the high capacity to deliver high social rates of return. And if you look at the numbers, you know, they're in the right place, or they would be if the exchange rate was in the right place. Now, what is true, I think, is that the elasticity of demand for exports and imports in the UK is quite low at the moment. But that's because all the elastic bit, all the bit that's really price sensitive, has been driven out of business. What you've got to do is to get back into an area where it becomes worthwhile citing new industrial projects in the UK rather than elsewhere. At the moment, that just isn't happening. This is why the portion of GDP coming from manufacture is going down and down. But until we can make it cheaper and more competitive to produce products in the UK rather than somewhere else, you're never going to, you know, everything else you try and do won't work.
John, I've got a question here from Abigail Levin, and we've talked about this before, about the amount of investment we make into research and development isn't even at the world average, I understand. And Abigail works with a number of small manufacturing businesses with less than 50 employees, and she says she's tried on numerous occasions to try and get support with R&D from universities, and each time she says they've been disappointed. She believes that universities are not really interested in small businesses that have maybe 10 to 15,000 to spend on R&D. And she cites one university that apparently has a good track record, or so it claims, of working with SMEs, but they informed her that they prefer to work with Jaguar Land Rover rather than SMEs. How can we get this changed? It's been spoken about since the 1990s, but her manufacturing clients haven't seen any shift in terms of support to businesses manufacturing at that level in terms of their size.
Well, I mean, this is a big problem. You're absolutely right. The proportion of GDP going on R&D is lower in the UK than the OECD and comparable countries, and that's partly a reflection of the fact that the proportion of GDP coming from manufacturing is lower than it is more or less everywhere else as well. And one of the problems we've got in this country is that if we have really good inventions and patented products and processes, if it's cheaper to get the output that they can produce made somewhere else, that's what will happen. And it's just a long track record in this country of really good inventions coming forward, which in the end finish up by being made somewhere else, either in China or somewhere else abroad. Or you get short-term views taken by people in this country who have just built up their countries, like happened, for example, with ARM, if you remember that particular case, and then sell out abroad. And you finish up with a relatively small proportion of GDP coming from manufacturing, and B, quite a high proportion of that being owned by foreign countries and foreign companies, which aren't necessarily aligned with the interests of the UK in the same way as a British company would be. Mm-hmm. So if you're going to increase the amount of R&D that we're going to spend, which I think we should do, given the right circumstances, you want to make sure this benefits the UK economy to a reasonable extent and just not all drift abroad and finish up by being exploited somewhere else.
There's obviously a sort of a brain drain that happens elsewhere, but you know, just coming back to Abigail's point, I can remember as a member of Parliament you know, well, probably about over 15 years ago. But I seem to remember a scheme where universities would provide researchers and others to actually be based in local firms, small businesses, and work alongside that particular manufacturer. So they could really see what was happening within that company, and obviously bring their expertise and understanding to that firm. And you know, one of the big problems, it seems to me, for SMEs, and I see this in my local Chamber of Commerce, the people who are out there making things, particularly the smaller concerns, they haven't got time to take time out to sit on a Chamber of Commerce or do anything of that, because they're just, you know, running to catch up the whole time. Do you think, given there's so much talk by this government, as there have been by previous governments, about supporting this sector, that they need to be a little bit more directive? And within the university community, we should see more help to some of these firms, because these are the firms embedded in communities. They're not going anywhere, but often they're the ones that get the least amount of support. And a little bit of support for some of these companies from universities would probably go a long way.
Well, I think we just do need to get the amount of research and development we're doing up across the piece. I think what you suggested is, you know, would be very helpful. But as I said, you do need to make sure that if we do spend more money on R&D, that at least a reasonable proportion of that benefit does stay in the UK. It doesn't seep abroad, which unfortunately has been the case over the last few years to far too large an extent.
So why do you, just ask you about, maybe we talk about China, but maybe a bit closer to home, you know, which countries seem to be, you know, in some ways quite similar sort of countries, socially and economically like our own, and politically in terms of a democracy. Which countries do you point to where we should be looking to say, you know, if they can do it, we can too? I mean, we're never going to be able to do we're never going to be able to compete with China in lots of areas, but where should we be looking to as our role models?
Well, you're saying you can't compete with China. I mean, one of the really interesting questions is, why was the USSR so unsuccessful in developing internationally tradable and attractively priced products, and the Chinese so good at doing it? And it's easy to say, oh, well, it's because of traditions and because of the sort of society that was and all the rest of it. But actually, I'm not at all sure that is the fundamental reason. There's a story about Stalin, who had his Minister of Finance in to determine what ruble exchange rate with the dollar there was going to be. And the recommendation that came forward from the finance minister was it should be 14 rubles to the dollar. And Stalin took out his pen and struck out the 1, leaving it 4. And as a result of all this, the Soviet economy was always chronically overvalued in terms of its exchange rate. Never managed to get any sort of serious development of international manufacturing going. Depended very heavily on the export of oil and timber and other things, more commodities where the exchange rate doesn't matter so much. And as a result, flagged and in the end collapsed. Whereas what the Chinese did, whether it was done by deliberately or whether it just happened, I'm really not so sure. They hugely devalued their currency when they came into the international trading world in about 1980, and absolutely romped ahead ever since. And so I think the idea that it's just impossible for countries in the West, all of which have followed more or less the same sort of policies as we have in terms of having relatively high exchange rates compared to the Far East, it's impossible to get changes made. I just don't believe it is. I mean, I think there are huge problems about changing things around inside the European Union, at least as far as the Eurozone is concerned, because that locks all these currencies together. Okay. There's difficulties about getting the US dollar to a lower exchange rate because it's a reserve currency. Actually, one of the countries in the world which has got its own independent central bank still, and the capacity and room for maneuver to make some really big changes, is the UK. Whether we should break ranks and and go down a different track from everybody else is, I think, a very important question, but that's what I think we should do.
Okay. So Ollie asks a question that post-Brexit, now obviously post-Brexit, you know, I don't know if Ollie's referring to when we actually left as to when the journey to that situation, but obviously we've had the pandemic. But Ollie says post-Brexit, sterling fell quite a way. Did that have the effect you were expecting in terms of exports or investment?
Well, the answer is that it did improve things a bit, not as much as all that. But there is a problem here, which is that if you've got a very overvalued currency, like I think we have, then a comparatively small reduction in the exchange rate doesn't make a huge difference. You're still far too overvalued for it to be worthwhile putting a new plant down in the UK rather than in somewhere else. What you do need to do, and this was very much the lesson of what happened in the 1930s, was to get to a stage where you are really genuinely competitive, and then the economy just romps away. And the reason for this is that the price sensitivity of exporting and manufacturing is relatively high. And so as long as you can get yourself into a situation where you've got competitive prices, it's not that difficult then to get the economy to expand and fructify. And that's, I think, really what we ought to be doing.
I've got a question from Jay Mitra, who says, to what extent do you think governments should get involved not only in facilitating investment, but in making direct investment, including managing them in new and innovative, predominantly government-owned firms?
Well, I'm fairly open-minded about who owns the companies that operate, and I think the public sector can do some things very well, and the private sector can too. What I think you need is a kind of market approach on all this, because I think the idea that you sort of buy your way into having more expensive products by subsidizing them really doesn't work. What you need to do is to reduce the whole cost base to get the products competitively priced. So I don't think the whole exchange rate issue is a very ideological issue between public ownership and private ownership at all. I think the actual practical reality is that the really sensitive areas of the economy tend to be in the private sector and tend to be the ones that are involved in international trading, where that's where the big economies of scale come on manufacturing. And these tend to be privately owned and therefore require profitability for their investments to take place. And that is crucially important. So that's why profitability is crucially important. And again, you're back to the need to get the cost base low enough to make that happen. So I think the answer is on the private and public sector, there's roles for both to play, but the practical result of the way the economy is run and has developed is that most of it will be done by the private sector.
We've had a couple of questions on how on earth is this going to happen if to get these sort of policies talked about in government. And I think the questioners believe in terms of the Labour government doing that, we're not going to have one with first past the post. Now, I have to say to John and Caroline who raised those questions, well, that's all very well, but you know, Labour actually has to win, first of all, first past the post. But I think it does raise an important issue about, is there anything in this around building any sort of cross-party consensus? A bit like the underpinned, if you like, a pension scheme or let's state pension scheme, or for that matter, you know, everybody, you know, basically supports the NHS. They have different ways of showing it, but it's a fundamental part of who we are. Is there a way in which, on this particular area of public policy, there is room for cross-party support? Our board is cross-party, and what we're trying to show is that whilst Labour and Conservative clearly come from different starting points, there are some fundamentals here if we're going to have any revival for manufacturing that is going to require a certain amount of political consensus going forward. Do you think that's achievable, John? What's your sense on what new Tory MPs are saying about this?
Well, I think you're absolutely right in saying you've got to have some sort of reasonable consensus about it all. I don't think it's just politicians. I think actually it's quite difficult for politicians to take the lead on all this because of where public opinion is. What needs to change is what people think in the academic world, what the sort of service things, what public opinion is, what think tanks say. You need a change of approach. But I mean, this has happened in the past. We look at what happened in the 1970s and 1980s, and there was a huge dramatic change from the Keynesian approach that we have for the first couple of decades after the war to neoliberalism and monetarism. I mean, there's a massive change in intellectual approach, which was won over a comparatively short period of time. And I think that the chances of this happening in the West at the moment actually aren't very great. The consequence then is we're going to finish up with very low growth rates for a very long period of time. And this may well of itself in the end trigger off some sort of revulsion and some sort of change towards policies that are going to be more effective. But I mean, I do think that to some extent what politicians need is the support of the sort of intellectual world and public opinion behind them for this to happen.
So just to push you on that, John, because we had a question earlier about why aren't universities and academics, why isn't there more voice in that community for some of the things you're suggesting?
Well, I mean, one of the things I think really is interesting is what people do say about the whole devaluation case. I mean, why should we have a really well advanced policy on interest rates and on the fiscal side of what we do on the monetary side of our policy making, but have no view at all on the exchange rate? And if you say to people, well, what do you think that should be done? What do you think should be done to get the growth rate up by a couple of percent per annum? What can you do to shift investment up from where it is at the moment, 17% to something like 25%, which is the world average? What changes are you going to make that are going to achieve anything? You don't get the sort of policies that I've suggested shot down. People just sort of ignore them and pass by on the other side. And what I think we really need to do, apart from anything else, is just get a discussion going on where we are. I mean, what is to switch the academic world away to some extent from the sort of policies that it tends to harbor on economics, to saying, what would you do to get the growth rate up? It's all very well saying it's all very difficult and there's no solutions, but that's not going to solve the problem. What we do need is to find ways of actually getting that growth rate up by a couple of percent per annum to keep us up with the world average. So it's not that an ambitious target, but the idea of being having growth rates drifting down from 1% to 0.5%, and then perhaps no growth at all for a long period of time is so appalling that really the need to sort of shift the approach and do better than that seems to me to be overwhelmingly large. And really, I think that the Institute for Prosperity we've got exists to try and get a discussion going about how to cope with these issues.
So Musha Khan says a 25% devaluation would not affect the import costs of exporting firms, but it would affect the prices facing consumers. Essentially, real wages will go down. And if workers demand higher wages to compensate, much of the competitive advantage may disappear. The key thing is to focus on how to raise productivity. That means not just skills, but also the organizational capabilities of entrepreneurs. And we have it citing here, German productivity is higher than the UK, often using the same machinery. I'm not against devaluation, but like many others here, I think we need to take productivity seriously.
Well, I think we certainly need to take productivity seriously. The problem is how you're going to do it. And I think the only real way of doing it is to spend a lot more money investing in the sort of machinery and production systems, the technology, mechanization and power that produces really high social rates of return. And if you don't do that, I think you finish up with having no growth at all. But back to the problem which I alluded to at the beginning of what I was saying earlier on, which is that the social rate of return you get, its contribution towards the growth rate of the economy as a whole, from most investment in the public sector and a lot of it in the private sector, in investment in office blocks and shopping malls and IT and new restaurant projects, this sort of thing, the social rate of return is very low. What really bumps it up is getting into the mechanization and technology and use of power. and if you really want to get productivity up, that's what you've got to focus on. Now, if you say, well, we need to get productivity up by training people better, by having more money going to industry and all this kind of thing, on its own, I just don't think it works. This has been tried for years and years and years and just hasn't cut the mustard. What really does work is to get the investment rate up and shift towards the sort of investment that's got a really high rate of return. That's what actually delivers the goods in all these countries like China and Japan after the war, which achieved high growth rates, and that's where we need to go.
Do you think government, I mean, obviously, you know, we have the National Infrastructure Commission. I think, you know, there's a lot of talk about infrastructure from across, you know, the party divides on this. But there was I think not so long ago, there was a report actually going back to SMEs where they didn't feel the sort of infrastructure that was being, you know, touted was really what they needed in their local communities. You know, the HS2s, you know, might have their place, but they don't really provide the sort of more localized infrastructure that many sort of smaller manufacturers really rely on. Do you think government needs to be a bit more clear about what sort of infrastructure they're prepared to sort of encourage? And maybe should this be put at a more regional level so that actually those metro mayors and others who may have a better sense of what is needed are given more power in this area?
Well, I think the answer is that investment has falls to some extent in two different camps. You've got investment which is there for social reasons in schools and hospitals and roads and rail and public buildings and housing and that sort of thing. And then you've got the investment which pushes up the growth rate, which is back to mechanization and technology and power. And I think you need both. So I'm not saying you should cut back on investment in that you need for social reasons. I think you need to do that. But the trouble we've got is that the investment we've got in the bits that really push the growth rate up and increase productivity are so low now that the depreciation of existing assets more or less equals new investment. And then you finish up with no growth. That's the problem we've got ourselves run into. I mean, if you want a really, really poor example of spending money to get the growth rate up, HS2 takes some beating. I mean, here's a project which has got doubtful returns coming in 10 years' time compared to investing in machinery in, I don't know, plastics or something like that, where you get a 50% return in 1 year. And we're going to be spending about £10 billion a year for 7 or 8 years, maybe 10 years on building HS2 with very little return at the end of the day. And that's, you know, you can see why with that sort of activity going on, the average returns that you get for a lot of this sort of expenditure in road and rail and so forth, producing such a dismally low average returns. That's the problem.
Question from Donna Lee. Shouldn't we be focusing on green growth? We are meant to get to net zero by 2050. Isn't that where the sort of new jobs might be found? John, what about green growth?
Yes, I mean, I think we certainly should do that. And I think one of the other things that this highlights also is that apart from anything else, we've got some very expensive problems coming down the track, which is one of the reasons why I think we badly need to get the growth rate up. We need to shift it towards being more environmentally sustainable, but you also need to be there to avoid living standards being squeezed right down. And just to give you some numbers, the figures that I've seen suggest that climate change is going to cost probably something like 3% of GDP. Extra healthcare costs are going to be something like another 2%. You've got social care and all the issues around looking after pensioners and so on, probably another 2%. You've got need to spend more money on education and training, particularly training, which has been cut back by about 1% of GDP over the last 10 years. You need to restore that. You add all that lot up together, it's something like 10% of people's disposable incomes are going to disappear if we're not very careful. We don't replace them with something else. So this is one of the reasons why I think that the problems we face with having an economy which is really stagnant while all these costs are increasing, it is just going to put more and more political and social pressure on everybody. It's going to push us towards the sort cuts and austerity that we don't need. Whereas really what we could do is to trade ourselves out of all this and do very much better. And that's what I think we ought to be doing.
I mean, the government has made some big decisions in relation to, for example, petrol and diesel. Their timeline has an end in sight. They've also said they want to get us all off gas when 80%, I think, of households in the UK rely on gas for cooking and heating, I think. So given that, they've set these sort of targets in terms of our moving from one form of fuel and also energy for our homes, do you think there's enough from them about how they're going to sort of supply for, let's take heat pumps, for example, whether or not we've got the skills out there in the UK to do that? I hope that in a lot of areas we can see, people being retrained in terms of their skills to make the transition. But incredibly, we might end up with a situation, if we're not careful, that those boilers and others that we've got here in the UK, we're going to end up with the replacements all being manufactured elsewhere, let alone trying to find the skills to actually put them into people's home and maintain them. Is the government spending enough time thinking about the manufacturing benefit that could come from the move to a more green economy and a green way of living?
Well, I'm not sure they are. I'm not sure what the government thinks is going to happen over the next few years once we the bounce back from the coronavirus finishes. I mean, what is the growth rate going to be? If it's going to be 0.5% or 1% or something per annum, I think we're going to be in a huge cost squeeze to deal with all these issues to do with climate change, which are going to be very expensive. I think the idea that climate change is a real opportunity for making lots of money and rebuilding the economy is very optimistic. I'm not saying that it's not very important that we ought to be spending a lot of time and energy to combat and mitigate climate change. I certainly think we should. But I think that we also need to recognize that there's going to be some very substantial costs involved. And if we can't get the economy to grow more quickly, then the squeeze on incomes that's going to come from that and other sources is going to be very, very substantial.
A question from Ya Yin. Today's manufacturing activities heavily rely on the local supply side ecosystem, the global value chains, and the global production networks and capabilities. Which value chain segments of which manufacturing activities should the UK target, do you think, John? And how do the UK manufacturing industry scale globally, especially in the post-Brexit era? And I'll come to the third question when you've answered those two.
Okay. Well, I mean, the answer is that there's a wide range of things we could do. I mean, I think it's just worth going into a superstore and just looking around at the products that are there. I mean, why can't we make Christmas lights? Why can't we make kettles? Why can't we make toasters? Why can't we make pressure washers? These are not products that are rocket science to produce. They're relatively simple products. And the reason why they're not made here, they're made in Germany or China or Holland or Singapore, is that it's just cheaper to make them. And one way or another, any firms that were involved in these products got squeezed out of business in the UK and they prospered in these other countries. And you're not going to get changes made in a dramatic way overnight. It's going to take time. I think if you want to get manufacturing back to somewhere around about 15% of GDP, which I think is about where it needs to be to get the economy back to being rebalanced, you need to do this over 5 or 10 years, in which case the amounts that you've got to do per year are not unmanageably great. What you've got to do is to make sure you make a start and that you keep the process going and get lifted up from 10% to 15%, maybe 1% or 0.5% or something per annum to get there. But I think the idea that you're going to have just one or two major industries that are going to do it is not what's going to happen. What you need to do is you need to get factories going all over the place. And if you go to Germany or go to Switzerland, every little village has got a factory producing something. Here, all you've got is rows and rows of dereliction, and the old factory sites being turned into supermarkets. That's not the way we're ever going to get the growth rate up. What we need to do is to go back to mapping manufacturing and spread it all around over lots of different categories of product over a wide geographical area. That's the way to do it.
From my own experience in Doncaster is, we still have a number of different, people manufacturing. I mean, we have we have Hitachi, which obviously is involved in sort of with the Azuma and what have you on that level. But I can think of a number of businesses, one that manufactures kitchens here in the UK, another that manufactures fittings with aluminium within the home. Isn't part of the problem about this discussion is that there isn't really a huge awareness of what we currently even have in terms of manufacturing beyond, say, Jaguar Land Rover in the car industry. I mean, if I had a pound or a tenner, let's say a tenner, if I had a tenner for every MP or government minister, that when they talk about manufacturing, they tend to only talk about maybe the car industry and aerospace. Not that they're not important, but it's almost disguises where actually some manufacturing, despite everything that's we've talked about so far and the difficulties, actually exists. And therefore, there isn't a sort of awareness about the role that it still plays in many communities to provide what I would say are really decent jobs and opportunities. Isn't that part of the problem here, that we just don't have a discussion beyond the big guys in all of this?
I think that's right. And I think also there's a huge amount of concentration on high tech, which people can get their heads around, as opposed to lower tech, which is actually where the bulk of all products are. If you look at that container ship that got stuck in the Suez Canal, 20,000 or something containers they had on there, those containers weren't full of high tech products most of the time. A lot of them is relatively medium and low tech. And that's what international trade is all about. And that's what we need to start producing if we're going to start getting manufacturing back to being the sort of percentage of GDP that it needs to be. I mean, it's gone down partly as a percentage of GDP because manufactured goods have gone down in price, whereas services have gone up. And there's also been a bit of a tendency for some elements of what used to be included in manufacturing, like catering, now being outsourced, so that they turn up as services. So the reduction in manufacturing that we've seen has not actually been quite as large as the bald figures were made out, but it's still the reduction is far too large for comfort. And this is why we've got all these problems I alluded to earlier on: poor job prospects in the country, unbalanced economy, huge differences in productivity in London and other parts of the world, the UK, and the huge balance of payments problem as well, where we've got an enormous deficit, but we're never going to be able to get the economy to grow to a reasonable extent. We've got the balance of payments deficit thick end of £100 billion a year around our neck all the time.
So we're coming to the close of our hour, and I just wanted to get Rajinder's question to you, which is, we're having this discussion and you're outlining some of your views, John. What do you think we need from our sort of national and for that matter local policymakers? What understanding and qualities do they need to drive this agenda? Because it's not an easy subject, and possibly a lot of our politicians, and I would include myself in this, we haven't necessarily run a business or we've never manufactured something. What sort of qualities do we need from our leaders nationally and locally to make a difference here?
Well, I think that's a very good question, and not one easy one to provide a sort of snappy, helpful answer to. I mean, I think that really what's needed is a big debate around all this. I think just ignoring the problems that we've got of lack of competitiveness and the fact that we're likely to drift into having falling living standards over the coming period, it's a really, really big issue, and one which we need to get people to get their heads around. So I said earlier on, I'm not sure that politicians are the people really to sort of to lead the charge in terms of getting really big changes in economic policy made. I think that really depends more on public opinion, on the academic world, on journalists, on civil service, and think tanks, that sort of area. What I do think we need to do is to have a debate, though, on really whether we think that having no policy on the exchange rate at all, which is really where we are, is a sensible way of running an economy, when it's absolutely clear that competitiveness is crucially important in terms of our ability to make our way in the world, to hold our own against foreign competition, to make sure we don't go on losing share of world trade with lower growth rates than everywhere else. This is not the way to run the country. And I think we need a big debate to try and see whether we can do better than that.
Thank you very much, John. And you've been grilled, there you are, for an hour there, with questions back and forth to you. And I hope we'll be able to do this again. I just wanted to pick up on just a couple of comments that people have raised. I mean, it is quite interesting. I'm doing some other work in terms of getting to zero, and some of the work I've been doing is looking at some of those areas that have the highest emitting jobs. And unless we do something to ensure that we have a just transition, we could find some of our communities that already feel pretty left behind even more. But it's quite interesting that when you look at how successful the UK has been in the last 20 odd years in reducing its emissions, a lot of that's to do, and we've talked about this, John, with the fact that so much of our manufacturing went overseas, and therefore by default our emissions have gone down. It wasn't some magic strategy to be greener and cleaner. We just exported jobs overseas, and then we re-import goods that are probably manufactured to more, inferior conditions in terms of the environment than we are likely to do on our own. And I think definitely, along with looking at new types of energy, and someone's mentioned hydrogen fuel cells here, green building materials, totally agree with all of that. But actually, part of it is about how we make our manufacturing more efficient and able to produce things in a way that is environmentally friendly. And to be honest, we're in a better place to do that than a lot of other places. But people who've asked the question about offshoring as well, there is a move by some manufacturers to look at onshoring more. And I think this is quite an interesting part of the debate as well, that actually onshoring, having more local supply chains that are make sense in terms of manufacturing, but also in terms of that whole green agenda, but also in terms of creating that opportunity for supply chains into firms to create the jobs that we want. And if I just point to Humber and the work that's being done there around both offshore wind, but other forms of technology, the idea to actually make what we need in that sector, but also the small businesses to supply into it, is very much something that is already happening out there. I think it's fair to say, John, just maybe just to leave the sort of last word to you before we sign off, is if there's one thing you could say about, I mean, I know we've talked about the big economy and all of this and the contribution to growth on that sort of national scale, but if there was one thing you would say about the difference manufacturing jobs make in a local community, what would you say?
Well, I think they do make, on the whole, for much more stable communities. I think one of the problems about service sector jobs is at the top you've got some really very good jobs, but a long tail of relatively insecure, low productivity jobs. I think manufacturing is more stable and produces a kind of stability socially, which is really desirable. And I think there's big arguments in favour of having a reasonable manufacturing base, which aren't to do with just sort of straight economic things. It's more the social side of it all, which I'm sure you'd agree with, Caroline. So I think there's a hugely big agenda here which needs to be tackled. And I think if I just say a final word, my final word is do at least have a look at these issues. Don't brush them on one side and assume that there's absolutely nothing that can be done, that all we're going to do over the next few years is just maunder on the way we have. We really ought to be able to do better than this, and we need to think very hard about what needs to change to make that happen.
Thanks, John.
Thank you very much all for coming.
Yeah, thank you, John. I've given you the Paxman treatment, and thank you everybody for coming along and being with us for this just over an hour. I think just having the discussion is really, really important. And unless we air all the issues, even if we don't agree exactly with all of them, we've got to have that discussion. And thank you all, and look forward to seeing you all again. Many thanks.